Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to our weekly podcast. Global equities trended higher to post modest gains for the week as investors remained cautious ahead of the next week's US inflation data and Federal Reserve's policy rate decision. During the week, the Reserve Bank of Australia surprised markets with a 25 basis policy rate hike in June policy after pausing the rate hike cycle earlier in April. This was followed by an unexpected 25 basis policy rate hike by the Bank of Canada, citing overheating of the economy and stubborn core inflation as a concern. Most major global equity indices ended the week higher, with the MSCI World, MSCI Emerging Markets, and MSCI Asia ex-Japan indices up 0.4%, 1.8%, and 1.3% respectively. In the US, the S&P 500 index, Nasdaq Composite, and Dow Jones Industrial Average Index rose 0.4%, 0.1%, and 0.3% respectively. Back home, Indian equities continued to rise for the third consecutive week but underperformed global peers. The Nifty index rose higher on the first three trading sessions but pared weekly gains later in the week amid profit booking and foreign investor outflows. Broader markets outperformed Nifty index, with the Nifty Mid-Cap Index up 0.5% and the Small Cap Index up 1.2% for the week. Among sectors, capital goods and utilities were the best performing sectors with gains of over 4.4%, while the IT sector led the losers, down 3% for the week. The INR depreciated against the US dollar as higher US bond yields negated the positive impact of weaker US dollar and lower crude oil prices. For the week, the INR fell 0.2% to close at 82.5 per dollar. Brent crude oil fell 1.6% to close at USD 74.8 per British barrel, as disappointing Chinese data added to the doubts about demand growth after Saudi Arabia's weakened decision to cut output. The Indian fixed income market came under pressure this week as Indian government bond yields rose across the curve after the RBI decided to maintain its withdrawal of accommodation stance in its June 2023 Monetary Policy Committee meeting. The 10-year Indian government bond yield rose 5 basis points to 7.04%, while the 3-year and 5-year Indian government bond yields rose by 10 basis points and 8 basis points respectively over the week. Among the major updates for the week was on India's Monetary Policy Committee meeting. In a unanimous decision, the RBI kept its policy repo rate unchanged at 6.5% and maintained its monetary stance focused on withdrawal of accommodation. While the decision to maintain the policy rates unchanged was in line with market expectations, the accompanying commentary was hawkish, with frequent references to headline inflation remaining above the 4% medium-term target, indicating that the Monetary Policy Committee awaits better visibility on achieving its glide path mid-monsoon uncertainty. On growth and inflation projections, the MPC revised its fiscal year 2024 average CPI forecast lower to 5.1% from 5.2% earlier. Its quarterly projection for Q4 fiscal year 2024 remained unchanged at 5.2%. The MPC maintained its fiscal year 2024 GDP growth projection at 6.5%, and the governor asserted a broadening growth momentum. He further added that credit growth in the economy is strong at around 15 to 16%, and that the external sector remains resilient with a sustained improvement in current account dynamics. That's it in this edition, and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.